Hi, Tori Agler with McIlvaney Precious Metals with your monthly recap for August of 2025. As I try to do every month, certainly images help. This does accompany the email, so you'll see some of the detailed breakdown of numbers there. But don't hesitate to reach out if this stimulates any questions. Sharing the screen with the visuals, as always here, will get you a little bit better idea of what we're seeing. We are going to look ahead, not just behind, for the month of August. And it's important to note that we had a great performance. So it's kind of a tale of two seasons. Typically, we see the metals prices come down in the summer. The low for the year can be June and July, sometimes December. That just really was not the case here this year. Very, very bullish activity with the fact that the white metals continue to have a strong summer. Gold traded somewhat flat, chopping sideways, and we'll get into that as well. But gold was up 4.6% in August, silver up 8.4%, so it contracted that ratio back down even tighter. Platinum up 5.5%. The two losers, the US dollar continues to lose, but palladium also down 6.3% for the month of August. Here's gold up 4.6 for the month. It's a fun chart. Again, it had this sideways chop and a lot of volatility there in a tight range. But I mean, we got from below 3,300 to now, as I record, we're actually over 3,500 because this is September 2nd as I wrap up the August outlook. Gold's up 31% before today, up 31% in 2025. Very fun activity. Silver up 8.4% in August. Again, we saw some lows down just right around $36 an ounce. Now we're north of 40, but we closed the month right around 39.69 on Friday, the 29th of August. That brought silver up 37% so far this year. Look at that chart. Very, very fun. The only dip here, kind of that post tariff concern, where we otherwise have this kind of uninterrupted trend line here of this steady climb with silver, and as commodities play catch up with a reinflation in the economy. Silver's up 237% in the last 5 years. So, albeit some people had silver fatigue for a while, you shouldn't anymore. Everybody should be happy with the silver position. We're keeping an eye on the ratio, which is next here. So the gold silver ratio has come down 17% since that dip in April in the silver spot price drove the gold to silver. So just gold divided by silver drove that ratio very, very high to 104. Now we're at 86 to 1. And that's very encouraging. Hopefully that trend continues because we'll be swapping our silver into gold as it does. Platinum's up 5.5% in the month of August. Okay, and you'll see just a lot of whipsaw there, mostly trading sideways. But from where it opened at a dip, we ended up having a close up over 1,364, and it's leading the charge this year. It's up 49% in 2025. A lot of you have spoken with me about your platinum positions. The best advice for me is to kind of hold it and let it ride because there's no indication to ratio trade out of it yet, but at least it's battling that platinum fatigue that had set in for many, many years as it just chopped sideways. So we'll see what transpires. Palladium continues its downward trend, down 6.3% in the month of August. That doesn't sound terrible, but if you look here, it is up 18% in 2025, and that's kind of a little bit of a false optimism. That's because it's down 65% in the last 3 years. So it's continuing this downward trend until we get a significant breakout, and we'll see. What I really want to see is platinum be 2 or 3 times the price of palladium before I'll feel as if the palladium floor has been put in. So economically speaking, it's all about the dollar. The dollar is up only in smoke. It's actually down, as we'll see here. So down another 2.3% in August as it continues its decline. As we draw out here through the year, you'll see how significant this decline is, from almost 110 on the US dollar index all the way down to 97. Keep in mind, we've seen it down in the 70s, like post-financial crisis and stuff. And with President Trump hoping for a weaker dollar, I would expect this to continue down. The grass is still green on the gold side of the fence. And to me, it's like bullish activity is all around us. We've got technicals and fundamentals, which we'll show. Here are my thoughts. Gold's going to go to $3,600 as you'll see here. Silver's going to go to 44. Gold's already at 3,527. We've seen about a $35, $40 pop here, which I didn't expect it to happen that quickly. Actually, it's at $51 today. So that 36 doesn't seem as much like a stretch, but silver's going to go to 44. The ratio will continue to decline. I think the stock market is due for a correction this fall, somewhere between 4 and 7% conservatively. There will only be one rate cut in September of 2025, and they will not cut again until 2026, is my opinion. And even that rate cut in September is kind of iffy. We'll learn in the next 2 weeks whether or not it's justified. The labor markets are going to need time to get better. And so we'll see this week with labor reports coming in, and they came in worse than expected last month. And then inflation will continue to reaccelerate both the CPI and the PPI. So what are the technical bullish fund, signals, excuse me. Here's this sideways chop that I was talking about with the summer. So you've got this summer triangle. This is called an ascending triangle, and that compression means you're getting ready for a breakout. And we've continued to chop through the summer instead of having a significant decline in June and July like typical. What that means is that it favors a breakout. Well, lo and behold, we've gotten it now. So this is a very strong technical signal here, and now it's actually right up here where I have the mouse. So definitely a breakout of this ascending triangle. That's a bullish technical signal. Christopher Mullen of the Technical Traders is far more bullish than I am. He feels as if we're going to see about a 17% increase. This is going back a week or so, but we're going to go north of $4,100 gold in this recent climb in September. From a silver standpoint, it was very, very critical that we broke through that $35 zone, which has served as the new floor, 32 to 35. Now, we're north of 40. Once we break above 40, we're going to see 42 to 44. That's very bullish, and then you'll get some resistance there. I still have optimism that in 2026, we're going to go north of 50 and set a new all-time high in silver. Why do I think that? Because if you zoom out and you go back this multi-decade look on silver, this is called a cup and handle. So here's the cup, here's the handle. And once we get to that $50 resistance level and we go north of that, that's when we're going to really see silver explode. For case in point, same thing with the gold chart, right? It had a cup and handle. And then in 2023, we finally broke out, and look what it's done since. And I think that the silver signal is shaping up to be the same, and silver has a long ways to go to play catch up. So what are the bullish fundamentals, like the underlying reasons for that? There is a lot of positive economic news. GDP is increasing, consumer spending's going up, imports have decreased, inflation has moderated a little bit from 2022 to 2024, but it's got now a recent cycle of spike. And then in terms of the home prices, they remain strong. Domestic investments increasing. Treasury yields have declined, so that's good for the Treasury outlook. Tariff revenues are hot. Energy prices are dropping, and then the stock market is at all-time highs. And in the stock market all-time highs, that's also concerning at the same time. So what are the concerning economic things that I'm looking at? Inflation's ramping back up. I think it will stay higher every month through the end of the year. Our economy has transitioned from manufacturing to services and healthcare over the long term, but it's trying to swing back. It's the debt, it's the deficit, it's the weak dollar, and it's the labor markets. That's where the target is, and that's what has gold climbing here. And so the concerning economic news is superseding the positive news. All right, so here's some underlying issues that will push gold higher. All right, I just mentioned a lot of those, but primarily I think the velocity of money is going to increase, meaning the number of times that a dollar turns over, and that's because President Trump is very stimulative. They are trying to weaken the dollar. They're trying to grow manufacturing and economic activity. Credit markets, if they cut rates, will expand, and that will increase the money supply and spending through borrowing. So that's the key one for me. That's the key takeaway. And to point to this, Trump's first term, I mean, you saw gold with a continuing decline of the dollar. You saw gold go up 8.5%, 13.5%, and 19.5% in 3 of his 4 years. The only year that it didn't was, the tail end of 2019 when things were starting to get rosy. But the bigger picture is the total debt change. That purple picture and the orange is the deficit. So the deficit and the debt really ramped up in his first term. That thing is going to, this picture is going to continue out during his second term. For the first time ever, not ever, since 1996, sorry, foreign central banks hold more gold than U.S. Treasury. So we just crossed this point. We had already crossed the euro. We had more gold than the euro. Now you've got more gold than U.S. Treasuries, and that's a remarkable chart that shows you that if big money's doing it, you should be doing it as well, because these are the puppeteers, if you will, and all of it comes down to this debt clock, right? So we've surpassed 37 trillion in August. We're now running a $2 trillion deficit, and the interest on our debt is over $1 trillion a year. All of that screams buy gold. This is the unemployment numbers. We talked about the labor markets worsening. If this continues to climb, they will cut rates again in September, and we'll see on September 5th what happens. What are my recommendations for August? Review your investment triangle. Save your money in gold, not in cash. Your cash robs you. Buy gold and silver on the dips right now at about a 50-50 gold-silver balance. Look at semi-numismatics for the premium play. It's a no-brainer, along with junk silver for the premium play. And on the silver side, the old silver dollars are a steal of a deal right here. We've never seen premiums lower in our company's 53-year history. Here's the investment triangle. Call me. You can talk to me, and we can certainly run through things. And just in terms of your individual portfolio, where are you on the growth side, on the savings side, and then in the physical metals, and are you adequately balanced? Very, very importantly here, you'll see that gold is not at a top, right? In relative value, until we get down into the single digits of the Dow Jones Industrial Average divided by the gold price, gold will not be overbought. Okay. For now, we're at 13-1 on that Dow to gold ratio. And when we get down below 10-1, we'll start getting excited about the fact that other assets are more undervalued. So that's it for your August recap. I know that's kind of a long one, but please call me at 866-211-8972 if I can be of any assistance. Eric and Deanna are here ready to speak with you as well. As a new addition to the team, Aiden Nagler, which I'm very excited about. My son has joined the team. So one of the four of us will be able to help you in terms of getting caught up on your portfolio, our outlooks, or just the logistics of moving monies and reinvesting. Thank you so much. God bless.